What's going on, YouTube Nation? This is Dark Dividend. If you guys are new to my YouTube channel, make sure you subscribe and hit notification bell so you don't miss future videos. We got video 2 of 2. This is a good headache to have. CEPI ETF versus LFGY ETF. This is a YieldMax versus Rex Shares ETF. Both of them distribute high yield income. We're going to compare and contrast, and we'll do an evaluation as to see which one is better. So you can tell me at the end of the video. I'll give you my thoughts on it. And I do own CEPI, and I do have interest in LFGY ETF. I like high income, and I like the model that LFGY has as well. I mean, obviously, I like CEPI. I own them, but I'm going to show you what they have. And they're kind of similar, but they're not. If you're new to this YouTube channel, make sure you subscribe and hit the notification bell so don't miss future videos. Smash that like button. Let's check out these ETFs right now. So this is pretty interesting. So this is the Rex Crypto Equity Premium Income ETF. So in the past year, it's been down 19.79%. Sitting at 41.01. Now, when it started, it was 51.13. This one has taken a significant drop. Now we're going to check out the LFGY. So the YieldMax Crypto Industry and Tech Port Opt Inc. ETF, say that 10 times fast, it's sitting at 39.74. So it has been down 22.46% this past year. It's down $11.51. Now let's look inside of them and see what's going on with both of these ETFs. I'm going to start with LFGY. So LFGY, its distribution rate is 60.72%. LFGY is an actively managed ETF that seeks current income and capital appreciation via direct investments in a select portfolio of crypto industry and tech companies, or it says in parentheses, the crypto companies. LFGY aims to distribute such income on a weekly basis. So, again, the fund, trust, and advisor are not affiliated with any underlying issuer. The fund does not invest directly in any digital assets like Bitcoin. Fund does not invest directly in the derivatives that track the performance of the digital assets. The fund does not invest in or seek exposure to the current spot or cash price of any digital assets. Okay, so that's one thing that you need to look into. But its distribution, okay, is weekly. So 122 was 74 cents and 62 cents and 60 cents, then 56, then 57, then 53, then 46. Now, again, you're looking at income, okay? So the fund overview, LFGY is an actively managed ETF that seeks current income and capital appreciation via direct investments, in a select portfolio of 15 to 30 crypto companies. LFGY seeks to generate income primarily by writing, says in parentheses, selling options contracts in all of its portfolio crypto companies. LFGY aims to distribute such income on a weekly basis. So LFGY seeks capital appreciation via direct investments in the crypto companies. Now, companies, okay? That's one thing that's unique about YieldMax is they have evolved. They don't just have synthetic calls. So to enable LFGY to effectively implement its investment strategy, its advisor evaluates the liquidity on a potential company's common stock and the liquidity of the options contracts. The advisor will also evaluate such company's price level and implied volatility and will monitor these factors when determining whether to select new companies or remove existing companies in the portfolio. So again, it's objective. Primary is to seek income. Secondary investment is to seek capital appreciation via investments in a select portfolio of the crypto companies. So it's top 10 holdings right here. MicroStrategy. Now, MSTY is a little bit down. MSTR is down. Coinbase is down. Mara is down. The iShares Bitcoin Trust. You got CleanSpark, Riot Platforms, Core Scientific, Hut, and looking at these, okay, they've been down. When crypto was good, they were good. But these are actual companies, it appears to be. I mean, MicroStrategy they have 40,616 shares. Their net assets, I mean, they have a lot of these. I mean, Mara, Coinbase. Mara's a good options ETF too, or I'm sorry, option income ETF with synthetic calls that they have. I mean, I'm not going to say it's bad. When things are good, things are good. Same with Coney. But this is actually Coinbase, okay? So it it's not synthetic calls. So that's one thing to look at. So that's the one thing that has me interested. I don't want really synthetic calls because I want something that's consistent and something that will generate me income. I'm a high yield income investor. They're seeing how things are looking with them. Now I'm going to jump to the REX shares. CEPI, the REX Crypto Equity Premium Income ETF. So its objective is to own stocks invested in crypto-related activities, write covered calls, and get premium income potential. So REX Crypto Equity Premium Income ETF, their investment objectives are capital appreciation and current income. Now, again, investing in CEPI is not equivalent to investing directly into cryptocurrency. They tell you that. They have 39 holdings. They have an expense ratio of 0.85%. Also, I'll go over the expense ratio of LFGY because I skipped that. But here's the thing. Here's its distribution. It's kind of newer, 169 and 157. Obviously, the share price going down can affect things, but 169 and 157. So that seems like a decent distribution. Here are their CEPI holdings. Okay. The BITA Crypto Assets and Digital Payments Index is a rules-based composite index that tracks market performance of 25 companies listed in the US. Now, the other one, I didn't list all of them, that are actively engaged in crypto-related activities such as cryptocurrency mining, trading, custody, blockchain technology development, and the creation of digital payment solutions. The index is weighted by a modified free float market capitalization and is reconstituted quarterly and rebalanced monthly, providing dynamic reflection of the market trends. So the big one of their symbols is Visa. I own Visa. Okay. That's a pretty good one with stability. And it's been down. MasterCard, Micron Technology, MicroStrategy, of course, there's one. AMD, there's Mara right there. Taiwan Semiconductor, NVIDIA, Robinhood. Okay, so we have some top ones right there. The top ones listed. The Robinhood's been up and down. AMD's been up and down. MicroStrategy's been up and down. Visa done pretty well over the past few years. Same with MasterCard. This is very interesting. Okay, so we're going to compare a few things, okay? And of course, you can send an email here, but I'm just comparing and contrasting a few things. So I'll go over the expense ratio of LFGY, and we're going to compare both of their prices and how they've done over time. So LFGY and CEPI right here. Just comparing the chart. Now, again, LFGY, I'm just going to confirm with you an expense ratio of 0.99%. CEPI started off a little bit later, but LFGY has dropped 22.46%. Now, the thing with LFGY is they're way more aggressive. CEPI is down 11.89%. The distribution of LFGY kind of just, concerns me being weekly. Could that drop it a little bit more? Maybe. But again, we're kind of in a bear market, it appears, maybe a little bit of a standstill. So what I'm doing with CEPI and just looking at the trends and everything, CEPI, I'm going to be buying more. LFGY, I'm going to evaluate for a few more months and see how things look. Because, these are not, it appears to have actual companies in them, LFGY. And you guys watching this video can correct me immediately. LFGY is way better than ULTY. ULTY is going to be a weekly options incoming ETF. That's I'm not a fan of that. I think that there's going to be a split. CEPI, I don't see a split happening. I mean, don't quote me on that. But just as the trends, okay, it's been down 11.89%. It's in a little bit more conservative companies as compared to LFGY. Now, I would love to own LFGY and get a high distribution uh, every week. I think it's better than the synthetic calls. I mean, it's very aggressive. I think if some of these ETFs or the companies within the ETFs do well, they're going to do well. The weekly distribution just has me concerned. The trends are going down. The net asset value is going down. And I'm a little worried that this could be in a direction of ULTY in the future. And ULTY is unique. So is CEPI. So is LFGY. So I'm going to continue to buy shares of CEPI. I like what's in it a little bit more stability right now. I think when things are good with both of them, things are really good. When things are bad, they're going to drop a little bit more in net asset value. So I'm going to stick with CEPI right now. I like CEPI. I'm going to buy more shares of them. I'm going to very closely watch LFGY because could it be an ETF that I like that's weekly and things go well? Sure. I'm going to have a lot of my questions answered hopefully next week. And I'm just going to say I have an investing philosophy. I want to integrate it still. I think YieldMax has many opportunities to integrate my investing philosophy. I really don't want to do synthetic calls. I'm looking at long-term investing. I want to make sure that there's not as much net asset value erosion for a long-term investing strategy. I mean, don't get me wrong, when things are great, YieldMax ETFs, things are really great. But you got a higher expense ratio with LFGY, the decrease in net asset value, so 0.99% expense ratio. I just like CEPI better. So if you're new to this YouTube channel, make sure you subscribe and hit the notification bell so don't miss future videos. I will have a video for you tomorrow. Take care and have a good one. And I'm going to jump to my disclaimer. So as a reminder, this is a disclaimer. Do not use my YouTube channel for any form of financial advice. It's strictly for entertainment purposes only. Investing is a big risk. You can gain money, you can lose money. So be aware and do your due diligence. Go to a financial advisor for financial advice and a tax advisor for tax advice. Do not buy things just because I buy things. Just being very honest with you and straightforward. You have to do your due diligence because you can lose money. Because look at these Two, there is a decrease in price per share. Be aware of that. You have to be aware of your risks when you invest. Take care and have a good one.